Hello everyone, this is Research on Investments. Today we'll be conducting a deep dive into AMD. And AMD's recent performance, in particular data center segment, driven by strong ramp of AMD Instinct GPUs, shipments and growth in AMD CPU sales indicates a strong, promising future for the company. However, the competition, especially from Nvidia in the AI space, and macroeconomics factor presents a challenge and some risk. Before going any further, I would like to mention that it takes a lot of effort to create these videos, around 20 to 30 hours each. So if you find them helpful and want to see more, please consider giving me a thumbs up and subscribing to this channel. Your support will mean a lot. So let's dive in. So these are some of the topic we'll be discussing today. Let's go into AMD's latest financial. AMD achieved a record revenue in Q3 2024, driven by robust growth in data center and client segments. Center segment revenue soared by 122% year over year, reaching a 3.5 billion. Client segment revenue increased by 29% year over year, reaching a 1.9 billion, fueled by the demand for Zen 5 AMD Ryzen processors. Gaming segment revenue declined 69% year over year due to low semi-custom revenue. As for embedded segment revenue, also decreased by 25% year over year as customers normalized inventory levels. According to the latest Q3 financial report, AMD total revenue increased by 18% year over year. Its non-GAAP gross margin stood at a 54%, and its non-GAAP operating income rose by 34%, and its non-GAAP operating margin also rose by 35%. What's particularly notable in these financial performance is that when compared to Intel's recent results, AMD has been capturing a significant portion of market share and revenue from Intel. Additionally, AMD appears to be much more profitable than Intel. The biggest growth factor for AMD lies in its data center business, which, much like Nvidia, will drive significant growth in the future. In the recent quarter, the data center segment accounted for approximately 52% of AMD's total revenue and around 60% of its operating income. This segment also experienced the highest growth rate compared to AMD's other business areas. This highlights AMD's growing success in generating revenue from the sale of AI GPUs. Given the massive demand for AI GPUs and AI computers required to train and run AI models and applications, AMD's data center business is compared to continue growing at a much faster pace than its other segments. The client computing business will remain the second largest growth driver for AMD, fueled by strong demand for high-performance CPUs among both consumers and professionals. Consumers in particular are eager to purchase high-performance gaming CPUs and often upgrade their gaming PCs every 4 years or so. Personally, I did the same thing. One of AMD's biggest risks is that its gaming business. It's not as competitive as Nvidia's. AMD's gaming segment is also highly cyclical, relying heavily on custom processor for PlayStation 5 and Xbox Series consoles. As a result, AMD's gaming revenue is closely tied to the sales of these consoles. Since the current generation of PlayStation 5 and Xbox Series are already about 4 years old. Sony and Microsoft will release next-gen consoles before AMD can see substantial revenue growth from these custom processors. Additionally, AMD faces some challenges in competing with Nvidia in high-end GPU market. For example, AMD has trailed behind Nvidia in discrete GPU market. As I personally built my own PC and as a gamer, personally prefer Nvidia's GPUs over AMD's due to Nvidia's reputation for producing the best, highest performance. While optimizing GPUs, game developers often prioritize optimizing their titles for Nvidia's GPUs because of Nvidia's dominant market share, which is over 70% of discrete GPU market and more than 300 million GeForce users worldwide. This explains why AMD gaming revenue took a significant hit in the most recent quarter. AMD can only effectively compete with Nvidia in the mid-range GPU market, not in the high-end segment. Another risk to consider is that as the time of this video, the broader semiconductor market outside of AI is still undergoing inventory correction. The entire market is gradually recovering, but AMD's embedded processing business has been on a downward trend for several quarters. According to AMD, many customers are still working through their inventory as the end market demand for these embedded processors remains low. While AMD expects its embedded business to begin recovering in 2025, the recovery is likely to be slow and gradual. Once again, AMD's biggest growth driver will be data center and client computing businesses. However, the biggest challenge is that AMD's gaming and embedded businesses are likely to weigh down its overall revenue and net profit growth in the coming quarters. So now let's discuss some of the other challenges AMD is facing and how Nvidia's entries into ARM-based chips affects AMD. Nvidia's decision to enter the ARM-based chip market for consumer PCs is set to be significantly impact AMD by intensifying competition in the key areas. Nvidia's focus on AI integration and high-end graphics directly overlaps with AMD's core market, putting pressure on AMD to innovate further to maintain its competitive position. This rivalry becomes more critical as both companies target high-performance computing and graphic-intensive consumer PCs. Nvidia's enterprise in GPUs and AI technologies gives us unique advantage in delivering integrated solutions, potentially outpacing AMD in areas like AI-driven computing. Moreover, Nvidia's adoption of ARM architecture introduces a fresh dynamic to the market, contrasting with AMD's continued reliance on the x86 architecture. This could force AMD to evaluate its strategic direction and consider advancements to keep pace with Nvidia's approach. The competitive pressure doesn't stop there. If Nvidia succeeds in delivering superior energy efficient and AI performance, consumer preferences may shift towards Nvidia power systems. This could result in AMD losing market share in key segments like gaming PC and high-end performance desktop. Furthermore, Nvidia entry could lead to pricing battle, squeezing AMD's profit margins. In long term, AMD faces strategic challenges that will require significant resource allocation towards AI-focused innovations. To remain competitive, AMD must also focus on brand differentiation by emphasizing its strengths, such as multi-core performance or niche market solutions. Ultimately, Nvidia's bold expansion into ARM-based chip presents a critical challenge for AMD, demanding rapid innovation and strategic agility to navigate the shifting landscape. First, Nvidia's CUDA platform remains the gold standard in AI software. While AMD is making progress with ROCMs, catching up to CUDA whiles requires significant effort and time. AMD also relies heavily on TSMC for manufacturing its chips. While TSMC is industry leader, however, the geopolitical tension in East Asia could pose risks to the supply chain. Lastly, AMD's customer base is heavily concentrated among hyperscalers like AWS and Microsoft. This makes them more vulnerable to any shifts in these relationships. Managing these risks will be crucial for AMD to sustain its momentum. So let's look into AMD's growth prospect. As for AMD Financial and its more important businesses, first of all, it's very important to understand AMD's business. AMD is the second largest GPU maker in the world, right behind Nvidia. AMD is also one of the two leading x86 CPU maker in the world. Intel is the other x86 CPU maker. AMD designs and makes computer processors, gaming processors, embedded processors, and related data center for technologies. AMD's primary products include CPUs, APUs, GPUs, DPUs, FPGAs, and chipsets for personal computer sets, servers, and embedded systems. In the CPU market, AMD competes with Intel in making x86 CPUs. AMD also competes with Qualcomm and other companies that make ARM-based processors. In the GPU market, AMD mainly competes with Nvidia in making consumer GPUs, AI GPUs, and AI supercomputers. AMD has four major business segments: data center, client computing, gaming business, and embedded business. I will focus on AMD's data center business and client computing business because these two will be the biggest growth opportunity for AMD's going forward. AMD performance in the desktop CPU market has nothing short of stellar. As of Q3 2024, AMD captured 28% of the market, a remarkable jump compared to both last quarter and last year. This growth is largely thanks to Ryzen 9000 series, which has been a hit with gamers and creators alike. What's driving this? Competitive pricing, cutting-edge 5nm architecture, and AMD's innovation in 3D V-Cache technology, which enhances performance in demanding applications. This growth is propelled by Ryzen 7000 series, which has set new benchmarks in performance and efficiency, appealing to a broad spectrum of users from gamers to professionals. Clearly, AMD is winning the heart and wallets of desktop users. So let's take a closer look at AMD's remarkable growth in desktop CPU market. This chart illustrates AMD and Intel's market share trends over the last several years. It's clear consistent increase in AMD's market share compared with Intel's declining dominance. In Q3 to 2016, AMD held 9.1% of the desktop CPU market, while Intel dominated with 90% of the CPU market. However, AMD's share steadily declined to 28% as of Q3 2024. Intel, on the other hand, dropped from 90% to 71.3% over the same period, a clear indicator of AMD competitive momentum. This growth is primarily attributed to AMD's Ryzen processor, which offer exceptional performance. AMD's decision to use TSMC's cutting-edge 5nm and 7nm manufacturing process has allowed them to produce high efficient and powerful chips. Furthermore, AMD's focus on multi-core performance and competitive pricing has resonated well with its target market. AMD's strategy of incremental performance improvements with each Ryzen generation has successfully capitalized on Intel's delays in transitioning to newer manufacturer technologies like 10nm and 7nm nodes. For example, Ryzen processors often deliver better multi-threaded performance at a lower cost compared to Intel Core processors. This shift signifies more than just market share. It indicates growing consumer confidence in AMD brand and technology. The company has position itself as a viable alternative to Intel across multiple consumer segments. Looking ahead, AMD trajectory in the desktop market will depend on continued innovation and Intel's ability or inability to recover from production setbacks. The upcoming Ryzen 8000 series and the evolution of AM5 platform will play a critical role in maintaining this upward trend. Laptop market has always been tough, with Intel dominating for years, but AMD is steadily gaining ground with a 22.3% share in Q3 2024. That's a solid improvement both quarter over quarter and year over year. Their Ryzen AI 3000 series and Ryzen 7000 mobile processors have been a game changer, especially in gaming laptops and ultrabooks. These chips combine multi-core performance with fantastic battery life, making them a favorite among both manufacturers and consumers. This success shows AMD is carving out a strong niche in an incredibly competitive space. When it comes to servers, AMD EPYC processors are making waves. Their market share is only 24.2%. Not a huge leap this quarter, but steadily growing year over year. What's driving this? The performance per watt advantage. EPYC chips are incredibly efficient, which is a huge win for data center aiming to lower energy costs while maintaining top performance. Major players like Meta, Oracle, and Google Cloud are adopting AMD processors to power their infrastructure. It is a sign that AMD is becoming a trusted name for data center, which is a highly lucrative market. Let's talk about one of AMD's most exciting opportunities, the AI data center market. This market is booming, projected to grow from $45 billion into 2023 to a staggering $5 billion by 2028. AMD M1 3000 GPUs are designed significantly for AMD's MI3000 GPUs are designed specifically for AI workload, like training large-scale language models. They're competing head-to-head with NVIDIA's top GPUs. AMD is also partnering with some of the biggest players, Microsoft, Meta, and Oracle Cloud. These partnerships validate the capabilities of AMD's hardware for demanding AI applications. On the software side, AMD is pushing ROCMs in its open source platform, while it's not quite at NVIDIA's CUDA level yet. Its open source nature makes it attractive for companies wanting more flexibility. This could be a game changer for AMD as AI continues to dominate tech development. The AI revolution has created an unprecedented demand for high-performance GPUs, essential for training models like GPT-4 and Llama. The GPU market is poised to expand exponentially, and while NVIDIA dominates with a 90% market share, AMD's open source ROCm software and competitive GPUs position it is a viable alternative. AMD has a significant opportunity to grow in rapidly expanding AI data center. The AI GPU market is projected to reach $500 billion by 2028, providing a vast market for AMD's Instant MI3000 series GPUs. Partnerships with industry leaders like Microsoft and Meta validates AMD's position in the AI landscape. AMD aims to achieve a 10% market share in the AI server market, leveraging its comprehensive AI infrastructure strategy. The company's strategy indicates an annual GPU releases, development of ROC open source software platform, and an expansion into AI infrastructure solution. The demand for AI GPUs is driven by a global race among tech giants like Google, Microsoft, and OpenAI to develop cutting-edge frontier AI models. As Jensen Huang from NVIDIA stated, the first company to reach the next plateau in AI innovation sets the standard, leaving others to play catch up. Meeting this challenge requires the most advanced GPUs and AI supercomputers, areas where NVIDIA holds a near monopoly. To understand why AMD is so dominant in AI server market, we need to look beyond its hardware and focus on its platform software ecosystem, specifically CUDA. CUDA is NVIDIA's proprietary parallel computing platform and programming model, which allows developers to run incredibly compute-intensive workloads such as training and inferencing AI models on NVIDIA's GPUs. CUDA is more than just a software. It has become the backbone of AI development for many companies. It signifies how developers work with GPUs and enables them to optimize their AI workload, especially for NVIDIA hardware. Think of it like this. If you're a developer building a skyscraper, CUDA is the blueprint that ensures every part of the building fits perfectly with NVIDIA's GPU. But here's what gets interesting. CUDA only works on NVIDIA GPUs. This creates what's called a lock-in effect. Developers who use CUDA to optimize their applications are effectively locked into NVIDIA's ecosystem. If they were to switch to a competitor like AMD, they have to re-optimize and rewrite much of their code, a time-consuming and an expensive process. This lock-in effect gives NVIDIA an unparalleled advantage because most AI companies, whether it's Google, Microsoft, OpenAI, or Meta, have already built their infrastructure around CUDA. The result is a self-reinforcing cycle where developers continue to use NVIDIA GPUs, which further solidifies NVIDIA's dominance. Additionally, NVIDIA has the largest base of developers and AI researchers actively using CUDA. These developers aren't just running simple applications, they're building foundational AI models and advanced AI applications that demand cutting-edge GPUs. With this ecosystem advantage, NVIDIA not only dominates the hardware market but also sets the standard for AI software tools. To put it simply, if a company wants the most seamless, energy-efficient, and scalable AI infrastructure, NVIDIA is their first and often only choice. This dominance makes it exceptionally hard for competitors like AMD or others to break into the market. Despite NVIDIA's stronghold, AMD is carving a niche in AI server market through partnerships with Meta and Microsoft. AMD's AI 3000X GPUs are gaining traction for AI workloads, while NVIDIA is expected to maintain a 80% market share. AMD's goal of 10% is ambitious yet achievable with its growing reputation. AMD's annually plan to release new product to challenge NVIDIA's leadership. Upcoming GPUs like AI 325X and AI 350 will target NVIDIA's most advanced products, while strategic partnerships with Microsoft and Meta demonstrate growing adoption of AMD's technologies. Collaboration highlights AMD's commitment to innovation in AI workloads. AMD is taking a holistic approach to AI infrastructure development, recognizing that competing solely in AI GPUs space wouldn't be enough to challenge Nvidia's dominance. Instead, AMD is creating a comprehensive AI ecosystem that integrates all critical components necessary for modern AI workloads and data centers. Let's break down this strategy. First, AMD data center CPUs are designed to complement AI GPUs. These processor handles general purpose tasks effectively while supporting AI workloads. This integrates ensures seamless transition between different types of computations. Next, at AMD's AI GPUs, while focus on both AI training, where new models are created, and inferencing, where trained models make predictions. These GPUs and AMD's direct competitors to Nvidia's H100 platform targeting the highest performance AI tasks. Interconnects plays a vital role for enabling high-speed communication between GPUs. This is especially crucial in a large-scale AI training task, where GPUs most collaborate efficiently. Similarly, AMD's DPU offload data-centric tasks like networking, storage, and security, improving servers' efficiency. When it comes to maintaining the enormous data flow in hyperscale AI-driven data centers, AMD's networking solutions ensures optimal performance. On the software side, AMD ROCm stack is an open source alternative to Nvidia's CUDA, providing developers the tools they need to optimize model for AMD hardware. The thermal management is another key factor. While liquid cooling systems handle heat generated by high-performance AI systems, finally AMD will offer rack-scale AI systems, which are pre-integrated racks that combine all of these components for quick development and scalability. Strategically, AMD is taking a page from Nvidia's playbook by offering a full-stack solution with a twist. The emphasis on open source and cost efficiency aims to attract developers and enterprise looking for an alternative to Nvidia's proprietary ecosystem. By simplifying integration and reducing adoption friction, AMD is positioning itself as a viable competitor in the AI infrastructure market. AMD CEO has outlined a comprehensive plan to expand the company's footprint in AI workload, encompassing both training and inference tasks. To remain competitive in rapidly evolving industry, AMD is adopting a consistent product cadence, releasing new AI GPUs annually. A key part of this strategy is AMD's open source ROCm software stack, which offers alternative to Nvidia's CUDA system. Also, AMD plans to acquire ZT System for $4.9 billion in around 2025 to strengthen its data center expertise in designing and building rack-scale AI servers. This strategy reflects AMD's broader vision to a full-stack comprehensive alternative to Nvidia in the AI data center market, offering open-source solution cost efficiencies to attract enterprise and developers alike. Now we'll be looking at AMD's valuation using discounted cash flow model and multiple valuation models. This is a tool I created, so when I'm analyzing a company stock, it should help me determine its intrinsic value. So these are some of these inputs which are really important when considering finding AMD's price. Or any stock in general, I believe. Shares outstanding, net income, free cash flow, and revenue for the trailing 12 months. And here are some of the metrics that I'm considering. So low, mid, high. This is still under development, so improvements are needed for this particular tool that I'm developing. So here are some of the low assumptions on the conservative side, mid, and high. So if we hit the calculate button, so for the multiple earnings model, it's saying that it's worth $45. On discounted cash flow, it's worth $35. And as for its mid assumptions, it's considering 174, and its discounted cash flow, it's considering it to be $124. If you believe in these assumptions, then I believe the stock is undervalued. And if you believe in high assumptions, then the stock is really undervalued and considered worth buying right now. However, all of this is just my opinion and my assumptions based on the research I've done. So please do your own research and own assumptions when considering investing. Finally, let's discuss will I buy AMD. Yes, I plan to gradually increase my investment in AMD shares over time as I believe they remain undervalued. However, to manage risks, I will cap AMD's allocation to approximately 5% of my portfolio. To conclude, AMD presents a strong case for investment, particularly for those seeking exposure to rapidly growing AI and data center markets. The company is well positioned to capitalize on market expansion through its productive innovation, cost-effective solutions, and strategic partnerships with industry leaders like Meta and Microsoft. Finally, AMD has demonstrated a strong revenue growth and operational efficiency, with analysts projecting significant upside potential in the stock price. However, investors should remain mindful of risks, including Nvidia's dominance, exclusion challenges, and industry cyclicality. Overall, AMD is an exciting investment opportunity for long-term investors who believe in the ability to navigate challenges and capitalize on transformative growth of AI. Please note, all of these are solely my opinion and analysis derived from my research. They do not constitute financial advice. Investing always carries inherent risks. I recommend conducting your own research through due diligence before making any investment decision. This from Research on Investment, and see you in the next video. Thank you. Bye.